All right, get ready to crunch some numbers because today we're diving deep into YumChina's Q3 2024 earnings call.
Yeah, we've got the transcript right here from their November 4th call.
And I got to say, these numbers are pretty fascinating, especially for anyone who's, keeping an eye on the Chinese consumer market.
Absolutely. And there's a lot to unpack here, from their impressive growth to some of the challenges they're facing.
Okay, so first things first, what's the big picture? How did YumChina actually perform this quarter?
Well, let's start with the top line numbers. Their revenue for the first 9 months of 2024 hit a record $8.7 billion.
Whoa, 8.7 billion. That's a lot of dumplings and fried chicken.
And it doesn't stop there. They also achieved over $1 billion in operating profit for the same period. Another record.
Okay, so clearly they're doing something right, especially when you consider, all the talk about economic headwinds. What's driving this success?
Well, part of it is their aggressive expansion. They opened a record-breaking 1,200 net new stores in those 9 months,
Wow, that's a lot of new restaurants.
bringing their total store count to over 13,000.
Okay, so they're growing fast. What else?
They also returned over $1.2 billion to shareholders.
Which is a pretty strong signal that they're confident in their future prospects.
Exactly.
All right, so the big picture looks pretty rosy, but let's get into the nitty-gritty. I'm dying to know how their flagship brand, KFC, is performing.
KFC is a powerhouse, no doubt. Their system sales in Q3 jumped 6% year over year,
6%? Not bad at all.
and same-store sales landed at 98% of the previous year's levels.
Okay, so they're holding steady even with all the economic uncertainty. People are still loving that Colonel Sanders recipe. What else did we learn about KFC from this earnings call?
Well, one thing that jumped out at me was this quote from the CEO. He said, "We have been intentionally widening our price range since 2017 to broaden our appeal to the mass market."
Interesting. So they're trying to make KFC more accessible to a wider range of consumers.
Exactly, and it seems to be paying off. They achieved a 1% same-store transaction growth.
Meaning more customers are coming through their doors. Makes sense. Yeah. People might be watching their wallets, but they still want to treat themselves. Now, what about Keiko Coffee? We've been hearing a lot of buzz about that lately.
Now, Keiko Coffee is on fire. They sold almost 200 million cups in the first 9 months of 2024,
200 million cups. That's a lot of coffee.
exceeding their total sales for all of last year. And both sales and cups sold are up about 30% year over year.
So clearly, people in China are developing a taste for Keiko Coffee. What's fueling that growth?
Well, their strategy seems to be a mix of clever menu innovation and strategic expansion. They're tapping into China's growing coffee culture, but they're also offering some unique food items that you wouldn't necessarily expect at a coffee shop.
Like what? Give us an example.
You remember that disruptive original recipe chicken lattice we talked about a while back?
Oh yeah, the one that got everyone talking.
Well, it's become a surprise bestseller at their Keiko Coffee cafes.
Really? So people are going to Keiko Coffee for the coffee, but they're staying for the chicken.
It seems that way. And the executives mentioned it during the earnings call. Apparently, customers were initially skeptical, but then they got curious, and ultimately they loved it.
That's a great story. It shows that they're willing to experiment and push boundaries.
Absolutely.
Now let's move on to Pizza Hut. How are they doing in this competitive market?
Pizza Hut is going through an interesting transformation in China. They're laser focused on affordability.
Affordability in this economy.
That makes sense. The CEO actually said, "Since 2017, we have been intentionally lowering our average ticket price to broaden our appeal to the mass market."
So they're going for volume over premium pricing.
It seems so.
Yeah.
And they're not afraid to experiment with new flavors.
Oh. Like what? Durian pizza. Wait, durian? The stinky fruit that people either love or hate?
That's the one. And believe it or not, it's a huge hit in China. 1 out of every 4 pizzas sold at Pizza Hut China is a durian pizza.
Wow, that's a lot of durian. Did the executives say anything else about this durian strategy?
Yeah, they see it as a way to stand out in a crowded market and appeal to local tastes.
It's definitely a bold move.
Yeah.
But hey, if it's working, it's working.
It seems to be working. Their core operating profit for Q3 jumped 20% year over year.
Okay, so durian pizza is a winner. What else did we learn about Pizza Hut's performance?
They added nearly 300 net new stores in the first 9 months, bringing their total store count to over 3,600.
So they're expanding rapidly, and they're doing it with a focus on affordability.
Exactly.
All right, so we've got KFC leaning into affordability, KC Offer V brewing up innovation, and Pizza Hut embracing durian. Now, let's talk about a bigger trend we're seeing across the restaurant industry: franchising. Now let's talk about a bigger trend we're seeing across the restaurant industry. YumChina seems to be really ramping up their franchising efforts.
They are, especially for KFC. Their original plan was for 15–20% of new KFC stores to be franchises, but they're now aiming for 40–50% in the next few years.
Wow, that's a big shift. What's driving that change?
A few things. First, they've developed new store models like the KFC Small Town Mini, which requires less capital expenditure, making it more attractive for franchisees.
Okay, so they're making it easier for people to open KFC franchises. What else?
They've also seen success with the Pizza Hut WOW model, a streamlined format that's ideal for lower-tier cities.
So they're targeting new markets with these franchise-friendly models.
Exactly. And finally, the quality and readiness of Chinese franchisees have improved considerably, giving them a stronger pool of potential partners.
So they're seeing a lot of potential in franchising. But are there any risks involved in this shift?
Well, one analyst did raise concerns about maintaining brand consistency and quality control when you're relying more heavily on franchisees.
That's a valid point. You're essentially putting your brand reputation in someone else's hands. How do the executives address that?
They emphasized their commitment to providing comprehensive support to franchisees, including rigorous training programs, operational guidelines, and robust digital systems to monitor performance and ensure brand consistency.
So they're not just handing over the keys and hoping for the best. They're putting in the work to make this model successful.
Exactly.
This is all really interesting, but I have to ask about one more thing that caught my eye in the earnings report. Their capital return plan. Didn't they just supersize it?
They did. Last year, they announced a 3-year plan to return $3 billion to shareholders. Now they're boosting that to a whopping $4.5 billion.
Wow, that's a 50% increase. What's the message they're sending with this move?
It's a clear signal of confidence in their ability to generate cash, even in a challenging economic environment. They're basically saying, we believe in our future, and we want to share our success with our shareholders.
Okay, so big investments in growth, a ramped-up franchising strategy, and a massive increase in shareholder returns. It sounds like YumChina is firing on all cylinders.
They are, but they're not operating in a vacuum, are they?
You're right. What about the broader economic context? China has implemented some stimulus policies recently. Have those had any noticeable impact on YumChina's business so far?
It's a bit early to say definitively. Executives acknowledge that these policies are a positive step, but their effects on consumer spending and business performance take time to materialize.
So no sudden surge in spending just yet?
Not yet, but they're cautiously optimistic.
Makes sense. Now, what about competition? Is the Chinese restaurant market getting more crowded?
Absolutely. It's a fiercely competitive landscape. Executives mentioned that the industry continues to grow, with global players like McDonald's and Starbucks still investing aggressively, and local players expanding into lower-tier cities. The heat is definitely on.
So how is YumChina navigating this increasingly competitive environment?
They're doubling down on operational efficiency and innovation to control costs and offer compelling value to consumers. They're also expanding their reach through new store formats and, as we discussed, ramping up their franchising efforts.
They're playing both offense and defense, it seems.
They are, and they're doing it well.
Okay, so we've covered a lot of ground here. From menu innovations and Durian pizzas to a supersized capital return plan. But there's one more crucial aspect of YumChina's story that we need to discuss. Their capital allocation strategy and what it reveals about their long-term vision.
You're right. Their decision to increase their capital returns to shareholders while simultaneously investing heavily in growth raises some interesting questions. Let's dig into that.
So it's a pretty bold move to ramp up shareholder returns, especially with all this economic uncertainty. What did we learn about this strategy from the earnings call?
Well, one analyst pointed out that based on their current cash flow, this increased capital return plan could actually deplete their cash reserves within the next 3 years.
Whoa, that's a pretty significant observation. Did the executives address that?
Oh, absolutely. They acknowledged the analyst's point, but they also emphasized their commitment to, delivering long-term shareholder value. They said they'll continue evaluating the best ways to achieve that balance, and they might even adjust the plan down the road if needed.
So they're keeping their options open, which makes sense. Now, this aggressive approach to capital returns kind of raises another question. Will they have enough firepower for big moves in the future, like acquisitions or other large strategic investments?
Another analyst actually brought that up during the call, and the executive response was pretty interesting. They emphasized that they're always looking at potential M&A opportunities, but they're being very selective.
So no impulsive spending sprees?
Not at all. They're only going to pursue deals that make strategic sense and create shareholder value. They even hinted at the possibility of taking on debt to finance acquisitions if the right opportunity comes along.
Interesting. So they're not ruling anything out, but they're being very cautious.
Exactly. They're being very disciplined with their capital.
Okay, let's shift gears a bit and talk about Keiko Coffee.
Yeah.
I'm really curious to hear more about the impact of those side-by-side Keiko Coffee cafes next to existing KFCs.
Right. That's a really smart way to leverage their existing footprint. And it's working. They're seeing a single-digit sales uplift from those locations.
So it's driving incremental profit.
Yep, it's a win-win. They attract new coffee customers while also boosting sales at their KFCs.
Makes sense. It's like built-in cross-promotion.
Yeah.
What else did they say about K Coffee's growth potential?
Well, this is pretty amazing. They revealed that a huge chunk of their existing YumChina members haven't even tried Keiko coffee yet.
Really? So there's a massive untapped market just waiting for them.
Exactly. And those side-by-side locations are a perfect way to introduce Keiko coffee to a whole new audience.
Smart move.
Yeah.
Now, let's talk about Pizza Hut WIW. We know it's a key part of their expansion strategy, especially in lower-tier cities. But I remember one analyst shared a kind of funny anecdote about their experience at a WRW store.
Oh, yeah, the one where they were impressed by the menu and the prices, but then disappointed that a lot of the items weren't actually available.
Yeah, that one. It sounds like they might be having some growing pains with this new format.
It's possible. I mean, remember, the WOW concept is still pretty new. They only started converting stores about 5 months ago.
So it's understandable that they're still working out some kinks.
Exactly. And the executives acknowledge that they're still refining the model. Their focus is on a two-step process. Innovation first, then operational efficiency.
So they want to get the concept right before they focus on streamlining everything.
Right. It's kind of like how they turned around KFC and Pizza Hut in the past. They prioritized sales and excitement first, and then they tackled profitability.
The long-term strategy.
It is. And it sounds like Pizza Hut WOW is making good progress. They're already seeing encouraging results with dine-in customers, especially in Guangdong province where they have more of these stores.
Okay, so it sounds like they're on the right track, even if there are a few bumps in the road.
Yeah, I think so.
Now, before we move on, there was one more intriguing detail from the earnings call that I wanted to touch on. A new store format called Kapui.
Ah, yes, Kapui. This one definitely caught my attention. It's still in the very early stages of testing, with just a few pilot stores in Hangzhou and Shanghai.
What can you tell us about this mysterious Kapui concept?
Well, based on what the executives shared, it sounds like they're targeting health-conscious consumers. The menu features things like healthy energy bowls and smoothies.
Interesting. So they're branching out beyond their traditional fried chicken pizza offerings.
They are. And I think it's a smart move. They're diversifying their portfolio and catering to evolving consumer preferences, especially with health and wellness becoming increasingly important in China.
It's all about adapting to those trends.
Exactly.
Is the executives give any hints about their plans for Kapui?
They're being pretty tight-lipped for now, but they did say that they're applying what they learned from K-Kofi to Kapui's rollout. They're using that same side-by-side strategy, opening Kapui stores next to existing KFCs.
Ah, so they can share resources and cross-promote?
Exactly. It's a proven strategy that's worked well for them before.
That'll be interesting to see how Kapui develops.
Yeah, definitely one to watch.
Okay, so we've covered a lot of ground in this deep dive. From new store formats and franchising to Kikipofi's impressive growth and this intriguing new Kapui concept. But there's one more crucial piece of the puzzle we need to examine. YumChina's capital allocation strategy.
You're right. Their decision to significantly increase shareholder returns while still investing heavily in growth is a major development. Let's unpack that a bit further.
So they're juggling a lot here. Shareholder returns, growth investments, and making sure they have enough cash on hand. Did they shed any light on how they're approaching all of this?
One thing that really stuck out to me was their emphasis on disciplined capital allocation. Remember that huge increase in their shareholder return plan?
Yeah, they bumped it up to $4.5 billion.
Right. But they were very clear that they're not just spending recklessly.
They're being strategic with their investments.
Exactly, and that applies to both organic growth and acquisitions. In fact, the CFO said during the call, and I'm quoting here, "We are always evaluating potential M&A opportunities, but we will only pursue deals that make strategic sense and create value for shareholders."
So they're not going to jump into anything impulsively?
Nope. They're being very careful.
But here's a question I had. With so much cash going back to shareholders, will that limit their ability to take advantage of future growth opportunities?
Yeah.
or even just respond to unexpected challenges?
That's a good question, and actually some analysts brought that up during the call.
Oh, really? So what did the executive say?
They basically said, don't worry, we've got this. They're confident in their ability to generate strong cash flow, even with the current economic situation. They believe they can fund both organic growth and strategic acquisitions while still giving a good chunk of change back to shareholders.
So they're not worried about overextending themselves.
Not at all. They even hinted that they might continue returning a good amount of their free cash flow to shareholders even after 2026. But they haven't made any firm decisions yet.
So they're staying flexible.
Exactly. Always adapting.
Anything else stand out to you about their capital allocation strategy?
Yeah, this was interesting. They didn't completely rule out the possibility of taking on debt to finance an acquisition. If the right opportunity came along, of course.
So they're not afraid of a little leverage.
Well, they were pretty clear that they'd be very careful about it, responsible.
Makes sense. They're not going to jeopardize their financial stability.
Right.
Well, this has been a fascinating deep dive into YumChina's Q3 2024 earnings. They're clearly a company that's not afraid to take risks and innovate.
Absolutely. They're constantly adapting and evolving to stay ahead of the curve.
And for our listeners, here's something to think about. As YumChina heads into Q4 and beyond, can they keep this momentum going? Will their strategy continue to pay off in the long run? What kind of moves will they make next?
Only time will tell. But it's definitely going to be an exciting ride.
It sure is. And that wraps up our deep dive into YumChina's Q3 2024 earnings. Thanks for listening, everyone. We'll see you next time.